I'm sure many of you, at least if you're like me, you're having a hard time making sense of the market right now. But that's my guest's genius. He is here to make sense of the market for us. Bob Kudla of Trade Genius Academy is back with us again. If you're not familiar with Bob, he started Trade Genius Academy back in 2015 after 25 years as an executive for 2 Fortune 500 companies in the financial services industry. And over the past 5 years, now I guess approaching 6, Bob's amassed an amazing 65% overall win record in the market. And so today, Bob's going to help make sense of things for us here in this crazy market and, shall we say, Biden's bizarre economy. So Bob, welcome back. Great to have you as always.
Oh, good. Great. I can't wait to hear what he has to say.
There you go. Remember, I'm just 20 minutes or so from Biden's basement. So if you listen, if you're really quiet, you can actually hear him snoring. It's a lot of fun. So anyway, but the last time we talked, it was about a month ago. Inflation, of course, was a major concern back then. So in your opinion, where are we with that? How concerned should we be about inflation on the horizon? What's the best defense moving forward and the like?
Yeah, so, and stop me if I'm repeating myself because I've been getting asked this question a lot. So there's really, I would say there's 5 components to this inflation story, right? There's food, there's energy, there's rent, there's healthcare, and then there's the supply chain bottleneck, if you will. I would even venture to say there's even a 6th one called hoarding or keeping product off market. Now, a lot of these things the Fed can't fix. So I would say we're entering into a structural inflationary environment based on the sins of the past and basically too loose money for too long to many of the wrong people. And so now we're in a situation where, I'll just briefly go through each one of them. Food now is really becoming an issue in terms of climate, and also there's certain countries in the world that can't produce enough food for themselves, i.e. China, that is just sucking all the surplus around the world onto their shores. They're very worried, not maybe for so much for today, but for tomorrow, that they have enough food, and they're starting to hoard grains and meat products from the United States and South America. And so I don't think there's anything the Fed can do now to lower food prices, especially now that we're having this drought out in the Northwest and in Central California, where a lot of the vegetable crops are grown. In the Northwest, one of my customers has friends that farm wheat up in Oregon on the eastern side, basically total loss. And so you're going to start seeing these extra areas starting to basically run out of surplus. So food's going to stay high. And then you have these crazy climate rules around the world that are in Europe that may even bring farming down even further. And so you have housing, which I think the Fed is complicit in something very evil, basically allowing BlackRock to become the nation's landlord. And those guys are paying with cash. So until and unless the Fed decides to actually raise the cost of capital of BlackRock, they're going to be able to outbid every US citizen for a home. And they're locking everybody into becoming basically renters. And the insidious thing about renting is that people are paying a mortgage and paying a rent, usually pay about the same price, except that you can never then save enough money to be able to buy the mortgage so you can actually build wealth over time. And so I don't think they're going to be able to fix that in the short term either. Healthcare is a demographic issue, and that's just going to keep rising. And energy is another area which is a major policy blunder on the part of the Biden administration. Since he's been elected, cost of oil has doubled. So gasoline has moved up quite a bit. And they keep talking this crazy climate change rules that are going to cause even more problems for us. So the Fed is impotent at this point. So long story short, all the noise that you hear about them talking about is transitory. It's not, it's structural. And so you're going to have to defend yourself against these ongoing price increases. And this is back, I think we talked about this before, this is the 70s all over again. The 70s didn't arrive in 1 year. This really started with the Vietnam War and the war on poverty. So this was 6 and 7 years build up until we got to the 70s, where they finally broke the dollar and they closed the gold window. But we're having the same problem now. We're what, 12 years, 11 years into this rescue from the 2008 crash, and we're choking now on all this liquidity, and it has to find a home. And people are putting it into things that have an asset value, and it's just going to keep prices up. So you're going to have to buy those areas longer term, especially energy is where a lot of people are hiding out, and I think they're going to stay there for a long time. They're not going to be able to tell Saudi Arabia and Russia what to do.
Oh, right. Wow. Is it so? What? Where does crypto come in all this? I mean, obviously it crashed, lost half its value since the spring. Was it April? I think was its high. What's on the horizon for like Bitcoin and Ethereum is perhaps like a hedge against inflation?
Yeah, look, it's the way I always look at it, like gold, silver, and commodities, they're kind of a hedge against the dollar weakening or fiat currency weakening, and cryptocurrency really is a hedge against the banking system. And so, ironically, at the same time that Bitcoin was being pulled down from the 60s down to $30,000, is the institutions were buying. So our view is that they were using that as an opportunity in the futures market of Bitcoin to be able to lower the price where they can start getting in. If you notice, every time it's gotten down to 30,000, it's been popping 10, 12, 14%. And again, it did the same thing this weekend. They got it over 30,000. You hear all this roaring about China's not in it anymore. They're closing Binance down. It's going to zero. You guys are idiots. Well, today it's 35,000, likely to be 36,000 tomorrow. You and I are talking on a Monday. And so, yeah, look, we're fine with it. People forget that Bitcoin went up 800%, okay, from last summer. So, it depends, I guess, where you sit, where you stand, right? If you bought it at 60, it went down 50%. If you bought it at 10, it's up 300%. So it's volatile. I think people now are, if they haven't learned it from 2017, you learned it in 2021. Bitcoin's volatile, and you're going to have to own it for the right reasons. At Trade Genius, we hold some and we trade some. And what the goal is to constantly bring our costs down long term. Phil, my partner who makes the crypto calls, said, hey, he thinks the low's in for the year, going out of this quarterly cycle. And he said we may have some alt trades that we're going to be able to do as well, which includes like Ethereum, Chainlink, Sola, those different kind of tokens. So that's where we are. I see no reason to change anything on the viewpoint is, look, they're pushing down hard. The harder Wall Street and the medium is against something, the more that you want to figure a way to own it, because they use the news media to shake you out of things that they want to get into cheaper.
Yeah, and I read too, Indians, just a mass amount of people in India are getting into crypto right now. And just also there's just a general social critique of our elites. We've lived in this posh and upscale nation with banking systems available to everyone and so forth. We forget that half, maybe more than half of the world, perhaps 2/3 of the world are facing, they've been facing out of skyrocketing inflation over decades. Their governments are not transparent. They're horrid and they're falling apart. Although we're all concerned about that right now here in our country. But crypto offers a window of freedom to so many people around the world that are not beneficiaries of the kind of financial blessings that we've had for so long. So in other words, the market and the need for that is huge, and it's if anything, it's just started. Do you concur with that?
Right, and people, we're myopic because we look at everything in dollars, but so in local currency, so Bitcoin probably hasn't done badly at all. In terms of just because the dollar got strong, it pushed it down. But you're absolutely right. There's some parts of the world where crypto is the franca lingua, so like Nigeria, they tried to shut it down in Nigeria. The people just went phone to phone, peer to peer. We don't need an exchange. You talk about India. 3 months ago, all you heard was India was going to ban crypto and throw people in jail. Look at now. The
You're right.
Indians can't get enough of it. They backed off. It's overwhelming the government's ability to stop because people have figured out that this is an asset that can't be counterfeited like you can counterfeit the local fiat.
Mm.
And so people are saying, you know what, I need to hold something that has a semblance of value. People understand all money is the medium of exchange that you can trust. It doesn't have any special characteristics. If I knew every week that we're trading fig leaves and you got a fig tree in your backyard, I probably wouldn't want to take figs, from you. So you want to have something that's hard to manufacture, hard to get. That's why gold was always so prevalent in the past, because it was difficult for somebody to create new supply of gold. And so I think we're at the end of this fiat regime. Whatever replaces it, I don't know. But I do know that very smart people are saying, you know what? Hey, it may not be a bad idea for me to take a flyer on some Bitcoin here, a flyer on some gold, a flyer. I know people have to use oil and energy, and I want to own things that hurt when it falls on my foot. Except for crypto, it just hurts your head to try to do the calculation.
There you go. That's good. Well, we've got an infrastructure bill on the dock there in the Senate and the like. Big spending bills. What do you see as what's most concerning to you, at least just in terms of the health of the market with what's coming out of DC?
Yeah, look, I mean, the market is just it's just mind-bogglingly strong, and so because of all the money that the Fed has pushed into the banking system. But what they've been doing over the last 6 weeks is they've been doing what's called reverse repos, and we're almost out now where they're taking $1 trillion out of the market when they do these repos. And what they're doing is they're telling the banks, give us your extra reserves, hold it here at the Fed, and we'll pay an interest rate. Don't use it to speculate in terms of loans or in terms of pushing it into the stock market. So at some time very soon, I think we're going to see probably a fairly strong crack, in the market, even though the government's going to keep spending. And this is also very 1970s like. So in the 70s, we went from this nifty 50 to today, we call it the FANGs, and they kept printing money in the 70s, but the stock market went down 47%. I think we're going to see the same kind of event happen here, whereas the liquidity is not going to help the stock market anymore because it's all going to be flowing into the velocity of money inside of Main Street for people that are spending as fast as they can to keep up with inflation. It's not a good thing, the velocity, it's a bad thing. So I think what's going to happen is here, I'll put my predictometer out and we can talk about it in September to see if I'm wrong. But we're going to go through July. After July 12th, you go into the earnings season. This is the earnings season that matches up against the worst of the pandemic. So a lot of these companies are going to show some really good results, but their forward guidance won't be so good. And I think people are going to sell the news. At the same time, we have another Fed meeting in July where they're going to keep trying to scare the children with the rhetoric, and people are going to take it a little bit more seriously. And then rolling into August, we have the Jackson Hole meeting that the Fed does every summer. And a lot of times action comes out of that sets us up for a pretty rocky fall. So I'm saying, I'm going to put it out there. I think in July, we probably hit the highs at some point. I think August will be volatile. And then I think in the fall, we'll get a normal, fairly strong sell-off. Now, the Biden administration is not helping, the cause. People bought Trump because Trump was so optimistic and positive and engaging, and the business knew that he had their back. Now, with the Biden administration, it's all subterfuge, division, and the only thing that's keeping it going is that they keep throwing money into the pot. Well, people in Congress are getting tired of just throwing money at it, and we're going to go into an election year, and I think the Republicans aren't going to be so inclined just to allow the Biden administration just to throw money at their supporters. So I think the political environment is going to seize up, and Biden does not have a majority in which he can push through things that he really wants to push through. And I think he's going to get increasingly frustrated. And you can see it already in his rhetoric. He's kind of losing it a little bit in terms of his cool.
Yeah.
So and that's his ilk. We've never seen President Biden, when he was a congressman, a senator, and VP. You only got snippets of this guy. He's going to be front and center, and I think people are going to get a taste of Joe that they may not like.
And Kamala as well, and her snapping at Lester Holt and a host of other media kin for asking her, why haven't you visited the border as of yet? Let me give you a couple of shout outs here, some attaboys, so people can get a sense of what to expect. They sign up for Trade Genius. This is Dale Shepard. Thanks, Mr. Bob, for a super fine trade. What's that? Do you remember what that was?
Oh gosh, I'm not sure. But we've had these last 6 weeks have just been on fire for us. So probably one of the energy names that we've done. And Dale's a really good trader, and he seems to pick up on a lot of things that we do, and he manages them very well. So, but I don't know the name of the company off the top of my head.
Here's one. Out FCEL, $11.30. Good profit. Thanks, Bob.
Oh, just another one of our signals. And what we do, just so people know, is that we have an algorithm, and people have access to the algorithm. They can trade what they want to trade. But I also throw trades out every day in the market. So what Dr. Steve is reading to you is people responding to some of the trade calls that we placed out there. And it was just one of our normal trades we put out there for people to take advantage of.
Yeah, this is another one from Dale. Out XLE, great trade, Bob. So same sort of thing there.
Yeah, energy names, energy, uranium. It's just that they've just been in fuego.
This is a good one. Let's see. I've got this trade out at 2.94, 29.5%. Another so-so trade. Thanks, Mr. Bob, with a little smiley face there. So I mean, you're getting these 30% returns here.
Yeah, in fact, that was the last of three we had, three in a row that we had that were 30% trades. And just the market has just been, and that's one thing that our algorithm does. We see the money flowing into a sector, so we quickly pivot our algorithm to those stocks in that sector, and we just throw those trades out there, and we've just been hitting it. And the hits keep continuing. We had another great day today as well.
That's amazing. Yeah, give us a sense of what people can expect when they sign up for Trade Genius.
Yeah, so what we do, if you join us, you immediately get the training videos to teach you how we trade, so you can understand why we do what we do. And we put it in a bunch of vignettes. So they're 2-3 minutes long. There's like 20 of them, so you can kind of get a sense for the market, sense for how we trade, and also teach you how our algorithms work. Because you get access to them. Unlike other services where it's kind of like guru black box, we put it all out there for you. So if you want to trade things that we don't trade, and a lot of people do, is that you can go ahead and build your own watch list and your own trades and set your own alerts and your own indicators and just follow the training. But in addition, what we do is we have chat rooms, so you can ask questions. Say, hey Bob, why are we in that trade? Why are we in that trade? Are we staying in this trade? Stuff like that. Or hey, why didn't this trade work out? Or what? That's a great trade. Here's an attaboy. Stuff like that. So you communicate. I'm in the rooms. We have a crypto room. We have a day trading room. We have a stock room, and we have somebody from Trade Genius on those rooms all the time, so we can communicate back and forth. And then finally, we put trades out there like every day. I try to do 1 or 2 of them, and just so that people can always have something to trade. That hits our scanner, and then that way we try to do. We'll teach you to fish. We'll get you good fishing equipment. We'll throw you some fish, and we'll put you in the right ocean.
Well, this is wonderful, Bob. I cannot thank you enough for joining us and helping us to make sense of things here with the stock market. Again, we do have a link down below for everybody who's interested in taking advantage of Trade Genius. Make sure to click on it and take advantage of their special bundles. You'll be glad that you did. God bless.